Hey everyone, John Henry here, SSFTG, Slingshot Futures Trading Group. In this one, we're going to be taking a look at how to use confirmed swings to gauge a little bit better market context. Sometimes it's really easy to get lost inside these little inside micro swings, and especially when these swings get a little bit wider, like over here, sometimes it's kind of unclear. Are we in a bull trend? Are we in a bear trend? What's happening, right? Trying to figure out what in the world's going on. And this is where I begin implementing confirmed swings. Now, we talk about this in the Day Trading Academy, and if you haven't checked that out yet, or if you're not a part of that yet, you can find out more information about that over on ssftg.com. The Day Trading Academy goes over confirmed swings for a big reason, and that's because they're a big part of how I go into discerning what's happening in these markets. And confirmed swings are nothing more than a way to mathematically figure out what is a viable swing. So what I mean by this is looking at the overall movement. Let's just take a very obvious turning point. I don't know. How about here? It's a very obvious turning point to the downside. So while the market's cruising its way to the downside, where does it stop? Well, it stops here. But at the time, how would we know that it actually stopped there? We don't know that this is actually the low until it broke back down and made a new low. Well, that means that once the market has retraced all the way up, and then turned back down and broke a new low, we have now gone back and confirmed that this was an actual swing. So we can go from there to here, and this was the highest point within that move after it had confirmed, right? So before it had gone all the way back down and made a new low, this was the highest point, meaning that our confirmed structure now looks, if it would let me draw a diagonal line, I'll go over there a little more, like this. Now, we have proven a new low, but until we break another new low, we don't know where that next swing is going to be. And until that happened, which is over here, this was the highest point that it went. So we can go in and we can say, okay, now we have a new low and a new high. Connect them up, and we've got our confirmed swing drive. We keep this momentum going to the downside. We've got another new low, which means that it confirmed down here. But again, we don't know that that's a new low until we have proof in the pudding. And if we go back, we can see that this actually came back and double topped on the previous confirmed swing, which just doesn't break it. So the fact that it has not broken it means that now, once it broke a new low again, we have proof. We can go up to our next swing. And until this is done, right, until this is done, like here, when we start reversing back the other direction, this would be a good example of an inside swing. This hasn't broken anything, right? They haven't broken a previous swing high. They haven't broken a previous swing low. So this really isn't any type of swing. And it's not confirmed because it never made a new low. And if we bring this a little further forward, this is a current market, so we don't know what's going to happen necessarily next. But from a confirmed swing standpoint, we've got the high, down, up, down to a new low, up, down to a new low, double top, down to a new low, kind of grindy. We'll just go down here. Comes back up to a new high, down here, maybe up. But again, these don't necessarily count. This is all still part of one leg until we break a previous confirmed swing. Once we've broken a confirmed swing, you typically want to see them break with some distance, right? I don't want to see them just fiddling around there, because a lot of times when that happens, look back here, when they trap those inside swings, a lot of times what they'll do is they'll break a previous confirmed swing, but they will not break the one before that. It creates a barrier, a trend zone. If that is broken, it's game over. The trend is over, right? Or at least 9 times out of 10, it's over. And this one just axed that one in half. If we go back a little bit further to look for some other examples, here would be another one where we start off at a very obvious high. We work our way down. We move back up to a new high. We drive down, and then they try to reverse. That breakout above the highs was not very successful, but you can see that the bulls did at least try to hold it for a little while until they eventually gave up. At this point in time, it makes no sense for the bulls to be long anymore because they've kind of lost their grip. We know what trends look like. Trends are supposed to break above the swing and come back and use it as support, not get back underneath it. So a lot of traders will start maybe jumping ship, and you can see they begin exiting at break even pretty obviously. Now, this would allow us to say, well, I can do one of two things here. I can continue this smaller cycle and say, well, they were kind of inside here, and with hindsight now we've got a double top and maybe they broke down. Or I can take a more simplistic approach and say, yeah, you know what? That's a little bit of a mess. I'm just going to say, that that's the highest point that they've got right there, and that's the last, most obvious confirmed swing. Why mess around with all these little bitty ones inside of here when you can make your life so much easier? The trend is bearish until this breaks. Once this is broken, it's game over. That's how it lands. Now, the same thing goes in the opposite direction. We start from the bottom and we work our way up. Once we broke here, now we have the possibility of them confirming a swing, but they don't have a confirmed swing until this happens over here, right? So once that occurs, now we can go forward. We've got our confirmed swing. And we can keep that trend going. You can see they maintain that bullishness all the way up until they lost their ground. And once they lost the ground, they rolled all the way back down again. It's this cycle over and over and over again. And this is where confirmed swings can really help keep you on the right side of the market so you don't end up finding yourself holding a bag when the market's crashing against you. So hopefully you found this useful, interesting, entertaining, and at least something maybe you can add to your tool belt along the way here, because they are incredibly useful and I use them constantly. This is also how I go about measuring where my order flow levels are. Confirm swings, right? That's how we know where the impulse was. But the important part is waiting for that confirmation to prove where they actually landed. As per the usual, I hope you found this video useful, interesting, and again, something you can add to your tool belt. If you have any questions, you can always shoot me an email or drop them in the comments below. And until the next video, we'll see you all then. Have a good one. We'll talk to you all then. Thanks.